What's going on, everybody? It's your boy James, and today we're going to be talking about this article I just came across. It talks about real estate market, and it's really about commercial real estate market and why this will affect the residential real estate, and give you guys my thought on it. Basically, this article talk about commercial real estate could be crashing soon, and here's why. The article talks about within the last couple of years how interest rate has been going up, and also commercial real estate could crash 40% from its peak. And they give a couple of examples, like for example, how that more than 50% of commercial mortgage has to be renegotiated within the next 24 months. And because of the new interest rate hike since the last 12 months from 0 to 5% basis point, the monthly payment for those commercials is going to get pretty high. And what that means is that commercial real estate is not going to profit as much. What could that mean, right? And what are some of the things and some of the challenges that people see? One, when commercial, like for example, retails, and not only retails, but I would say shopping center or office space, right? Some of these commercial property, they have to renegotiate in terms of their mortgage. And if that increases their monthly payment, the tenants have to deal with the burden, right? So who's going to get affected by all of this? So it talks about over 2 trillion commercial real estate mortgages are held by pretty much the small commercial banks, okay? And those small commercial banks could face a pretty heavy windfall within the next couple of months or so. And also, this article talks about how there's a huge refinancing risk, okay? And there could be a huge collapse coming soon due to, one, higher interest rate, two, the demand for office space has been going down, and three, more people are working from home versus going to the office. That creates less demand for commercial real estate, okay? Now, there's a lot of different type of commercial real estate. We're just talking about office buildings. We're talking about some retail spaces, but really just office building and retail spaces that doesn't get enough traffic and doesn't get enough income coming in. All right, they will have to get refinanced. Also, you think about, say, a place like a commercial resale shopping center. If somebody bought that place and they have to sell it to do a 1031 exchange, because they have to sell it and do a 1031 exchange, they have to buy a different property. What that means is that they have to get a different loan, okay? A lot of stuff is happening in the commercial route, but the commercial industry specifically has been going through a lot of challenges with regard to working from home and people not needing the offices anymore. This happened since the beginning, 2019, and even before that, 2017. Really, all of this news happened like during the time when Amazon came into business, right? It's just a matter of when, right? How soon, okay? But anyways, if you're looking to buy commercial property and you're looking to buy cash flow, a lot of times you have to look at making sure that the tenant and the type of business you're in, right, is everlasting, right? Don't get into major debt. Don't get into short-term debt, right? In terms of when you have to refinance it. Anyways, what we're thinking here is the commercial industry is going into a pretty big thing, and it's going to definitely affect the real estate market, but not as much if you think about it. There's still correlation, like offices and retail property valuation could plummet. There's an opportunity for, say, an investor to come in and buy, right, some of these, and they can do something nice with it. With offices, what you can probably do with offices is rebuild them up and build and make storage unit. Retail property, we're going into a digital age, guys, where everybody has a home office and they can work from home. They don't need commercial offices. It's not like back in the old days. This won't really affect you as much, considering if you think about, there's 3 types of ways on how to evaluate a property, right? One way is the income approach, the other way is the reproductive approach, and the other one is the cost approach. So right now, with the 40% decline, what they're saying is the income approach, because if these commercial buildings are not being rented out, then their income is not going to help them evaluate the commercial building as much. But if you're buying a single family home, we're really looking at the cost approach and the market approach. So how much does it cost to build a brand new house? Labor, not only labor, but material, land, and time, right? So how much does it cost to build? And then market approach, what are homes selling for in that market? And then the local economy also as well. I wouldn't worry so much about the residential side, more so for the office and the retail space side. Buying properties with debt could be a pro and there could be a con, but you got to learn how to use debt properly. Don't over leverage, buy what you can afford. Make sure that you guys stay safe out there, okay? But yes, commercial real estate market is crashing soon, and we'll definitely keep an eye out on that. Anyways, this is James with the Fam Real Estate Group. We're going to be signing out. Peace and love, guys. Peace and love.